video is for supply and demand traders, and if you trade futures as well, that's fine too. I'm just sharing my supply and demand methodology and what I do every day to find trades and make money. So the only futures trade I trade are gold. I also trade Bitcoin. I'm using this site. It's called the Money Calendar. It's really called Forex Factory, but I call it the Money Calendar because it's basically a money calendar. And the reason it's a money calendar is because as a supply and demand trader, we're making money. Supply and demand is simply expansion. When the market expands, we have trading opportunities. And those trading opportunities are our supply and demand zones. Now, to even know those supply and demand zones are going to exist, we come to our money calendar, which is forexfactory.com, and we go on the right side of the screen and we click the green icon. And now when we click the green icon, it's going to show this. So you're going to see expected, impacted. Think of this as temperature. So orange is hot and red is orange is warm, red is hot. We want to be only active in the market trading forwards or futures when the market is orange and red. So when the market is warm and hot. Orange is warm, red is hot. Only select that. Yellow, the market isn't really moving that much. Yellow means the market's in consolidation and moving a little bit. It's not moving that much. So that's good for traders that trade no smart money concepts. They just use indicators and crap like that. That's fine. So right now you can see everything's orange and red, and I only focus on trading what's orange and red. So if the US dollar news was today at 10 a.m., I would trade the US dollar and look for pairs that have the US dollar in it. So I can trade gold because gold USD has the US dollar in it. I can trade USD CAD, and I only want to look for 2 high quality trading setups per trading day, right? And that's a part of my risk management system. So on New Zealand, since we're on the money calendar, and it shows us that New Zealand's moving at 10 p.m. and CAD is moving at 10 a.m. I don't need to be in the market for New Zealand or look at the charts really until evening if I wanted to. So I'm going to focus on 10 a.m. news, which is happening tomorrow because today is April 7th, Monday, and tomorrow there's no news today, really, and tomorrow is Canada. So the first thing I'm going to do is go on my TradingView chart, and there's one thing I want you guys to understand first. When you're choosing your pairs on your forwards on your watch list, you need to understand that the only pairs that I'm going to be trading are pairs that have what's moving in it. So what's moving is New Zealand dollar and Canadian dollar. Those are the only currencies that are going to be moving. I need to go on my my TradingView, and I need to go on here and see, okay, since I know New Zealand is moving and Canadian currency is moving, only choose pairs to trade with New Zealand and Canada from your whole entire watch list. This is my entire watch list. I chose everything with USD, anything with Canadian dollar or New Zealand is going to be selected selected with red. Now, the reason I'm selecting all these pairs with red is because it has a currency that I want to be moving, right? So we have CAD up here, we have New Zealand CAD, and we have New Zealand USD. So I'm going to focus on these 3 pairs and see if I can align my strategy with the news, because the news is telling me that the market is going to expand on these pairs tomorrow. So that gives me an opportunity to potentially get in before that expansion, or I can trade the correction of that expansion. So a lot of times people avoid news because the news makes the market move, right? And move dramatically based on what news we're actually trading. So if we get this, right? Let's say the news expands and makes the market go upward. If the news expands and makes the market go upward, that means that we need to be buying low. So what I mean by buying low is this. So now that you understand that supply and demand is simply market expansion, and the market moves when there's supply and demand. Now let's give you a scenario that you can actually work with. Sorry, that's the TV. So the first scenario is, let's say the market goes up, right? The market always comes down before continuing the trend, right? And it does it again. The market isn't just going to keep going up. So if you're buying and you're in a bullish market, what you need to do as a supply and demand trader is this. You need to do this. Identify your current range, not your consolidation range, your current price range. Your current price range is the current high and low of the market expansion that you're trying to trade. So let's say right now, this drawing I drew on my screen, the market's going up now, right? It has not retraced yet, or it has not made a pullback yet. It made a pullback here, down here, but now the market expanded again, right? So here's what we need to be doing. We need to first identify the high, which is here, and the low, which is here. And let's say the low is $100 and the high is $200, right? Because that represents price. And this is going to help you understand. If you're buying an asset, you need to wait for the market to come low, because why would you buy it at $200 when it's already at the top? That's called FOMO. You have fear of missing out. So you see the market's all green and it's going up, so you think it's going to go up. You need to be patient and wait for the market to move how it operates and how it functions. Wait for the market to drop in price. So let's say it's at $200 and wait for it to drop to like 150, which would be like right in the middle of our range here. And that's the minimum you want price to drop as a supply and demand trader to trade. So if you're trading, you want price to drop, if you're buying, at least 50% of the range. Because sometimes it does that. Sometimes it doesn't come all the way down to the bottom. Sometimes it comes halfway and then reverses. So the minimum would be 50% of the range. And once you get there, prices are right now, let's say now prices at 150 versus 200. Prices are cheaper, so you can start aligning your setup. And what I mean by aligning your setup is you should find your supply. Let's say in this case we're buying, so we're looking for demand zone. You should find your demand zone at the bottom of the range, towards the bottom, towards 150 and 100, like I given in this example. And for me, I only trade two types of trade setups. So for me, demand zones look like order blocks and imbalance / fair value gaps. Order blocks and gaps are the only thing that I trade to make money. There are two different types of setups. And what helps me find those setups are two things: market structure / the trend, and this website I showed you at the beginning of the video, the money calendar. The money calendar shows me all these currencies that are going to be expanding in the market, because supply and demand is expansion. When there's demand, the markets expand. When there's supply, the markets expand. And markets don't continue expanding without a retracement. I don't care if it's been a year. It always retraces. Now, the beauty about being a day trader is that we can trade and make money off these short-term retracements back and to continue our supply and demand that's already happening in the market. So if you're still confused, just know this. Step one, you need to identify the trend by knowing what you're going to trade. So you come on this website as a forex trader or a futures trader, and if you're a futures trader, only look for the US dollar currency to be moving, right? So only look for you, like for example, Thursday we have the USD news at 8:30 a.m. So if you're a futures trader and you trade NAS, gold, SPX, any other pair like that, you can actually align this with your strategy. So we know that 8:30 a.m. on Monday, 8:30 a.m., the US dollar is going to be moving. So that means I'm going to go on the chart either before 8:30 or after 8:30, not during the news. I'm not telling you guys to trade during the news. Before or after, you're going to get on the market and you're going to look for your setup. And since the market is in fact going to be moving on that day, it should play out. And if it doesn't, that means there was something wrong with your strategy, because the market was guaranteed to move. I don't know why people don't use the economic calendar. It's literally a cheat code. It tells you everything that's going to be moving for the entire week, so you're not blind trading and you're not just imagining shit that isn't there. So right now, I'm going to go today on New Zealand Canadian, and I'm actually going to look for a trade setup. And actually, no, I'm going to go on CAD JPY, because CAD moves before New Zealand tomorrow, right? Because tomorrow is Tuesday, and tomorrow at 10 a.m. we have CAD news. So that's warm. I call it a warm market. A warm market is CAD. The hot market would be New Zealand, which is red. Orange is warm, red is hot. We have a warm market tomorrow for Canada. So what I'm going to be doing, sorry guys, I don't know why it's doing that, is I'm only going to be trading Canada. So yeah guys, that's pretty much what I'm going to be doing. I don't know why the chart is not appearing right now. It must be the internet or something. That is very weird. But yeah guys, I'm gonna go ahead and end the video here. And now that I know like what I was going to show you, now that I know Well, I'm gonna show you anyway. I don't give a fuck if it doesn't work. You can still see the price action. Look, you can still see it on the chart, even though it's blurry. So here's why I'm correct. It's not letting me do anything on the chart whatsoever, but I'm still gonna explain it and show you why I'm right. So right now on this screen, can't you see below my face the price action, right? And it looks like, I don't even know, I'm looking at the 4-hour chart. It looks like price is in a bearish trend. From this little bit of information, it looks like the market's going down, right? But what's interesting, it's not going down like normal. It went straight down. And what does that mean? For the market to go that far down and that straight down, that means there had to have been enough capital in the market to push the market to go that way. So that is why we're on New Zealand, right? New Zealand USD. This is telling us that the market's going to continue to move on Tuesday, April 8th, at 10 p.m. The market is continuing to move. It's guaranteed to continue to move. So it's guaranteed to continue to move either up or down. That doesn't matter to me. What matters to me is now I can apply my strategy, and I can actually, what I already know what's going to happen. Since it's so far down, what's going to happen is it's going to make its way back up to that gap. You probably can see that demand, that supply you can see right there. And the price is going to come up there, and it's going to retrace. And then we're going to see rejection candle at these areas, and then we're going to see the market continue to fall. But yeah, that's the secret to finding your trades as a supply demand trader or smart money trader is the news, economic calendar. All right, guys, peace out. I hope you. Oh wait, one more thing. I have a free Discord if any of you are interested. There's a free Discord. You don't have to pay to join. There's a lot of traders in there. We all share our charts. We have a good community. There's tons of value. I have daily chart setups, and I also have daily trading tips. I have a section in the channel where every single day you will see one of my setups, a visual screenshot that shows you the type of setups I trade, and you will also see you will get your daily daily trade tips because I post every single day daily trading tips for you right inside the chat. So if that sounds like something you're interested and you want to be part of a group that's free, no cost at all, join in the description. But yeah, I hope you enjoyed the video. If you have any questions, just message me. Peace.